Welcome to Industries in Transition, meeting the CSO series. The CSO is increasingly taking a more strategic position within companies, particularly those in the high emitting sectors. That's why I'm delighted to introduce today's guest, Dr. Fiona Wild. So Fiona, in terms of your career as in sustainability, what got you into that in the first place?
It's interesting. I think I've always known what I wanted to do. So when I was at school, I was particularly interested in the intersection between science and the environment. When I went to university, I was always fascinated again by environmental related issues. I ended up doing a PhD in chemistry that was focused on how you can get climate records from natural indicators. So from a very, very young age, I decided that what I wanted to do was work in high emitting sectors because I wanted to be able to deal with industries that had a significant problem to solve, and I wanted to be able to solve them.
As we consider the next generation of recruits for the mining sector, Fiona, what advice would you have for them?
I would say do it. I think it's a fabulous sector to work in because the scale of what we do is so enormous. The opportunity that we have to change the way people live is huge. So the commodities that BHP produces are actually the commodities that underpin decarbonisation, whether it's about producing steel to make wind turbines or whether it's about copper to make electric vehicles. Working in the mining sector gives you the opportunity to have a real impact at scale.
Do you see BHP moving from a period of short-term shareholder return focus to more growth now, trying to expand its business to supply into that sort of trend?
Absolutely. And I think it's about both. I think it's about shareholder return, but it's also about growth. So for us, you've seen this real shift over the last few years to focus on what we call those future-facing commodities. So really testing the resilience of our portfolio to understand which commodities will fare best in a decarbonising world and making sure we have that range of commodities in the portfolio that enable that transition. So things like metallurgical coal and iron ore to support steel production for decarbonisation, but also those commodities like copper and nickel that are going to be absolutely fundamental to things like electrification and more batteries being produced.
You've obviously put updated targets recently about your decarbonisation of goals, both medium and longer term. Could you maybe give me a little bit more sort of background on what those are and how that relates to, I suppose, your broader strategy as well?
Like many other companies in emissions intensive sectors, whether it's oil and gas or power or mining, we've been setting targets to reduce emissions since about the 1990s. And most companies have started by thinking through how you might set targets to reduce operational emissions. So that's normally about your scope 1 emissions. So that's the emissions associated with the direct combustion of fossil fuels, and your scope 2 emissions, which is around the emissions associated with electricity that is purchased by you for your activities. So we've been setting targets to reduce scope 1 and 2 for about 25 years now. Our current target is to reduce our scope 1 and 2 emissions by at least 30% by 2030. So we're really bending the curve. But what you're also seeing is companies starting to address what we call scope 3 emissions, which are the emissions associated not just with your operations, but the emissions associated with the entire value chain within which you sit. And that's a much more challenging issue because you don't have operational control over those emissions. They're somebody else's scope 1 or scope 2 emissions. So you have to approach that in a slightly different way. When we think about operational emissions, it's easier for us to set really clear targets for those because we can actually see pathways to reduce those emissions, and largely speaking, we have control over those. And we actually have a net zero goal by 2050. That net zero goal by 2050 also applies to our scope 3 emissions. So what we're aiming to do is decarbonise the value chains within which we sit by 2050. But it's very hard to translate that into quantifiable reduction targets across our entire scope 3 portfolio because some of those emissions at the moment, it's actually really hard to see a pathway to reduce them at scale, for example, in steel making.
As you look at those scope 1 and 2 emissions, the operational emissions, what sort of technologies are you focusing on to sort of reduce carbon emissions and particularly the ones that you've got that control over?
So for us, in terms of scope 1 and 2 emissions, about 40% of that comes from electricity consumption and about 40% comes from diesel combustion. and that the remaining 20 comes, broadly speaking, from a few other processes that we have around the operations, and also what we call fugitive emissions of methane. So methane which is produced as a result of mining operations. So when we're looking at decarbonisation, the first thing to do is to shift away from coal and gas-fired power. So shifting to renewables is one of the often the easiest and cheapest things to do for companies like ours. The second challenge for us, though, is around diesel consumption. All of our trucks run on diesel, and we use diesel and lots of other stationary equipment around our operations. It's actually very hard to replace those at the moment. So we can't simply swap out an enormous mining truck that currently runs on diesel for an electric truck. Those trucks are not yet available. So what's really important is to send a signal to the market. So to send it to those original equipment manufacturers to say there is demand for these products. And so we need to work with you to make sure that when we do the next fleet overhaul, that those electric vehicles are available.
Moving on to scope 3, which is, as we know, by far the largest amount of emissions. If you look at the metals and mining sector as steel and upstream mining, I know you've been dealing with quite a few of the largest steel groups in the world, to look at how you can help them reduce their emissions and, effectively reduce your scope 3 at the same time. So, any examples of around that would be interesting.
Scope 3 is really challenging. It's a complex issue to try and grapple with, to understand how do you set targets to reduce other people's operational emissions, which is effectively what we're often being asked to do. And what's really interesting is that now investors, so whether it's banks, asset owners, asset managers or insurers, they are actually being required to grapple with scope 3 in the same way that emissions intensive companies have been for several years. And so it's interesting to be able to have conversations about this and some of the challenges we've faced, some of the things we've learned. I think the important thing about scope 3 is, first of all, understanding where your emissions come from, but also being really clear that you understand that scope 3 emissions by their nature are not accurate or precise. So generally speaking, when you're calculating scope 3 emissions, it's giving you directional information. It's telling you, broadly speaking, where there are pockets of emissions risk, if you like, in your value chains. So you need to focus on where you have the most material emissions, but also where you think you have the biggest opportunity to influence. We think about scope 3, and our scope 3 emissions are about 400 million tonnes. About 3/4 of that comes from the steel making associated with our iron ore and metallurgical coal production. So in terms of materiality, steel making is a really big source of those reported scope 3 emissions for BHP. There are other pockets in that value chain where we have opportunities to influence, for example, in shipping, because we're the world's largest charterer of ships. And then when you're addressing scope 3 emissions, you have to work with partners who want to work with you. And sometimes that can take time. So you need to find an overlap of interest. You then need to find out what sorts of partnerships, what sorts of projects might that particular customer or supplier want to work on, and then create something that works for all concerned parties. And that can take time. So we now have partnerships with steel makers that represent around 13% of global steel production, so really significant steel producers. And when we think about these partnerships, we need to understand, where are these steel customers based? What are their priorities around decarbonisation? And what role can we play to catalyse those? And it varies depending on which player you're dealing with.
And in this quest to get to net zero, how are you working with your general the employees within BHP to empower them, to give them the tools and the skills to help you decarbonise?
I think the thing which has worked best is not trying to create a separate business, a separate stream of work, a separate set of systems and processes that are climate or sustainability related, which run parallel to the core business. The way to actually get change to happen at scale is to understand what drives the organisation. So what's the DNA of this organisation? And almost to go in and change that DNA. The most important thing I've learned is, don't try and create a separate process. Change the things that you know already drive the organisation, so you can harness that power and get different outcomes using the architecture that is already there within the business.
In terms of challenges that you have ahead, what do you see as your biggest challenges at the moment?
So I think one of the challenges I see is trying to keep up to date with what's happening, but also trying to keep up with expectations. When you're working in an organization like BHP, where you have long-term assets, long life assets, and you want to drive systemic change, you have to give people a really clear line of sight to where they're heading, and you have to give people the tools and systems to get there. It doesn't help if you keep changing things all of the time. That sometimes means that you can't be responding to every single change that's happening in terms of investor expectations or the latest buzzword. You need to know that there are two really important things to do from a climate perspective. One is to reduce your emissions, and the second thing is to adapt to the physical impacts of climate change, which leads me to the second thing that I find quite challenging. I think companies in general are getting much more comfortable thinking through the transition risks associated with climate change and how to set those targets and how to reduce their emissions and how to think about policy and regulatory and market shifts. I think there is still a lot of work for us to do, for all companies to do, in terms of thinking through the physical impacts of climate change and how we start to build flexibility and resilience into our plans.
Fiona, BHP decided to retain the New South Wales energy coal business. Do you think that is a sensible strategy? Is that long-term sustainable in terms of holding on to these assets? Be interested in your thoughts on that.
Yeah, I think particularly in the issue with New South Wales energy coal, it's a decision around value. So how do we think we can create the most value for shareholders? In that particular instance, we formed a view that the most appropriate way to deliver value to shareholders was actually to retain that asset and then seek to manage the closure out to 2030. I've recently been up to the mine site, actually, and it's fantastic seeing how that decision has started to drive so much ingenuity and opportunity around what this transition or this evolution can look like for that community and for that site. More broadly, we are seeing a bit of a shift in the way that people think about energy coal assets. So 5 years ago, there was a very, very strong push on divestment, and there were many activist groups who were sort of pushing the divestment campaign. What we've actually seen over the last couple of years is a real shift to talking more about ongoing engagement and managed wind down. Obviously, one of the issues with divestment is that emitting asset moves into somebody else's hands and the emissions will continue. One of the benefits of looking at something like a closure, for example, at Mount Arthur Coal, is that these emissions will not continue past 2030. But each of those decisions will need to be made on its merits and taking into account all the different drivers of value. But I'm excited about what the future holds for Mount Arthur and New South Wales energy coal and how we can demonstrate what a just transition really means in the energy coal business.
Is there anything that's giving you significant hope or a positive trend that you point to?
I was kind of hoping I still wouldn't be in a job in 2022. I was kind of hoping we would have fixed it all by now. But what I see at the moment, which I have never seen before, is this extraordinary momentum. So people worry about, will there be a kind of switch back to climate not being on the agenda, or will it be deprioritized? I really don't think it will. I think the momentum in the system at the moment is unlike anything we've ever seen before. And that gives me enormous hope that the action will accelerate and the outcomes will be minimized. It won't be as fast as we would like it, but it will probably be faster than I had imagined.
And do you think that's still the case with what we've seen in the last 6 months? Because clearly we've had this sort of turning coal power stations back on, and we've come out of the pandemic having talked a lot about transition and the need for change. Do you think we're going to fall back a little bit, or do you think actually this may accelerate things?
I think overall, the direction of travel is really clear. We are decarbonising. It's a question of how fast. I think the thing to bear in mind is that decarbonisation is not a linear process. It's lumpy. We don't see linear reductions in emissions because, you might get a big reduction when you switch over to power from a new supplier, or you might get a big reduction when you switch over your fleet from diesel powered to electric powered. Similarly, when the world decarbonises, as it's decarbonising, you don't see linear reductions, you have peaks and troughs. But I think the underlying trend is all downwards in terms of driving emissions down, and that's what gives me the great hope.
Fiona, thank you so much for your time today. It's been an absolute pleasure talking to you. We are at Standard Chartered are delighted to work with you going forward as you move towards a pathway to net zero.
Thank you.
Thank you for joining us today. Do please look out for more episodes of Industries in Transition, Meet the CSO, available on sc.com.